Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If you've ever felt trapped by bad credit, you're not alone. Millions of people are in the same boat. Maybe a few late payments that happened years ago, a collection that won't go away, or just a thin credit profile that keeps getting you denied. Whatever the reason, today's video is going to walk you through the best credit cards you can actually get approved for, even with bad credit. We'll start with unsecured cards, the ones that don't require a deposit, and then we'll work our way down to the tiers that are secured, which can be even smarter when you're trying to rebuild your credit. And by the end of this video, you'll know exactly where you stand, what you can qualify for, and how to move up the ladder towards excellent credit. So make sure you stick around until the end because I'll reveal a bonus strategy that can boost your approval odds almost instantly. And of course, if you find this video helpful, make sure to subscribe to the channel. It helps more people find this information. So without further ado, let's get right into the video. Let's start by being honest about what bad credit actually is. There's no single rule that every bank follows. Some lenders see anything below 580 as bad credit, others will use 600 as their line, and some even stretch it to 620 or below that. For this video, we'll use 600 as the benchmark. If your score is hovering around or below 600, we'll treat that as bad credit territory. But remember, there's a big difference between 590 and a 450. A 590 might need a little polishing. A 450 usually means you need a reset strategy. That's why we're going to break this down in levels, starting from the top of the bad credit range and working our way downward. The goal is to help you identify the right kind of card for where your credit score stands today and how you can build from there. When you're close to that 600 range, your first stop should always be one of the major credit card issuers. These are banks that have pre-approval tools, better upgrade paths, and real credit building potential. Two of the best places to start are Capital One and Discover. Discover is now part of Capital One. The two companies completed their merger on May 18th of 2025, with Discover Bank merging into Capital One. However, you cannot apply for a Discover card through Capital One's website as they are still separate brands despite this merger. Let's start with Capital One. If you go to Google and type credit cards for bad credit, you'll almost always see a Capital One ad at the top. They've built an entire product lineup specifically for people rebuilding their credit. In fact, Capital One is the largest subprime lender in the country. Their pre-approval tool is simple. You fill out a short form and within seconds, you'll know which cards you're likely to qualify for without hurting your credit score. If you get pre-approved, one of the first cards you'll likely see is the Capital One Platinum MasterCard. This card is one of the best starting points for people with fair or bad credit. It has no annual fee, it reports to all three major credit bureaus, and most importantly, it can be upgraded later to a better Capital One product once your score has improved. Another card in the lineup is the Capital One Quicksilver One. It's similar to the Platinum, but it earns 1.5% cash back on every purchase. The trade-off is that it usually has a small annual fee. Now, if Capital One says no or you just want to double your chances, the next major player will be Discover. Discover has built a strong reputation for working with people who are rebuilding their credit. They also offer pre-approval tools that don't hurt your credit score. If they show you an offer through that tool, chances are high that you'll be approved when you formally apply. Their Discover It Chrome for students and the Discover It Secure cards are both great options depending on how your credit looks. And Discover is known for being generous with credit limits and even upgrading secured cards to unsecured cards faster than most other banks. So in short, if your score is close to 600, then this is where you want to start. Try Capital One or Discover first before moving down the ladder. Let's say you try Capital One and Discover, but you got denied. Don't panic, this is where the next tier of credit builders come in. There are two companies that stand out in this space, and they're going to be Mission Lane and Merrick Bank. Now, Mission Lane is relatively new. They've been around for about 5 years, but they've quickly become one of the go-to options for people who are rebuilding their credit. They specialize in working with customers who have had past financial struggles, but who are serious about rebuilding. Their cards sometimes come with annual fees, and the interest rates can be higher, but the real advantage is the path to growth. Mission Lane offers automatic credit limit increases after consistent on-time payments. They also provide a pre-qualification form on their website that lets you see your odds of approval without a hard inquiry. Then there's Merrick Bank. an older, more established option that helps millions of people rebuild their credit. They're known for their double your line feature. After 7 months of on-time payments, they automatically review your account and can double your credit limit. That means if you start with $500, you could be at $1,000 by the end of year one, which does help your credit utilization and can help your score. Just like Mission Lane, Merrick Bank reports to all 3 credit bureaus. Merrick Bank's fees can be considered high by some, particularly for those seeking a low-cost credit card due to its annual fee and high regular purchase APR. But the long-term benefits can outweigh that cost, especially if you're disciplined and paying your card on time, as well as keeping your balances low. So if you've already been denied by the more established banks, then Mission Lane and Merrick are excellent second-tier options that can still move you forward. If you've made it this far down and you're still not approved, then it's time to explore what I call the backup tier. Now, this includes cards like Avant, Mercury, and Prosper. Avant is best known for personal loans, but they also offer a credit card that's designed for people with less than perfect credit. They tend to be more flexible than traditional banks, and while their interest rates might be high, they give people a fair shot at rebuilding. The Mercury MasterCard is another solid option. It's issued by First and Trust and designed for people who have had trouble getting approved elsewhere. Mercury occasionally will send out pre-approval invitations by mail, but you can always check online to see if you qualify. Prosper, on the other hand, is more selective and typically markets to those who receive mail offers. If you get pre-approval letters from a Prosper credit card or loan, that's a sign they already like your credit profile. Lastly, if you ever receive an invitation from the Synchrony Preferred MasterCard, that's another one worth considering. This card is invitation only, so you can't directly apply online, but if you get the offer, you might want to take it. Synchrony is one of the largest store card issuers in the US and often more forgiving than big banks. However, this is where you need to pay close attention to the terms. You can see higher APRs, smaller credit limits, and sometimes annual fees. And this is also where you'll start seeing some of the most predatory APRs as well as ridiculous fees. But if you use these cards strategically, you never max them out, you pay them in full every month, and keep your utilization below 30%, they can still help you rebuild your credit score. Now let's talk about one of the most overlooked ways to rebuild your credit: store credit cards. Most personal finance experts love to criticize store cards because of their high interest rates, and they're right. The rates are actually very terrible, but here's the thing. If you're trying to get approved for an unsecured card, retail cards can be your golden ticket. These cards are often more lenient when it comes to approval. Even with scores in the low 500s, many people will still get approved for them. And if you pay them off in full each month, the high interest rate doesn't matter because you'll never pay it. A few of the most forgiving store cards are the Amazon store card issued by Synchrony Bank. Since Amazon sells nearly everything, it's actually one of the most practical retail cards out there. There's also the My Best Buy credit card, another Synchrony Bank issue card that often approves rebuilders. There's also Macy's, Home Depot, even Gap or Banana Republic. All of these can help get your foot in the door. The key is not to open too many of these at once. You want to start with one, make a small purchase, pay it off in full every month, and within 6 to 12 months, you'll start seeing positive movement on your credit report. Store cards are also great for something called credit mix, showing lenders that you can handle different types of credit responsibly. Now we're getting into what I call the bottom tier cards. These are cards that can help you build credit, but they do come at a high cost. This includes companies like Credit One, Continental Finance, and Concora Credit. Let's start with Credit One. It's often confused with Capital One because the names sound similar, but they are completely different. Credit One offers cards for people with bad credit, and while they do report to all 3 major credit bureaus, you'll likely be paying for the privilege. Annual fees, maintenance fees, high interest rates are all common with this card. Then there's Concora Credit, which manages cards like the Indigo MasterCard, the Destiny MasterCard, and the Milestone Credit Card. These cards are basically the exact same product with different names. They're legitimate, but you'll often start with a very low limit, sometimes only $300, and you'll also have an annual fee that immediately eats into your available credit. Continental Finance operates in a very similar way. They issue cards like the Surge Card, the Reflex, the Fit, and the Cerulean Credit Card. Again, same story, small limits, high fees, high interest rates. Now, these cards do work. They report to Experian, Equifax, and TransUnion, and if you're truly struggling to get approved anywhere else, they can be a stepping stone, but you need to have the discipline. You don't want to max out a $300 card like this and carry a balance. It can actually hurt your score, not to mention the fees and the interest. The better move is to make one small charge per month, like maybe gas, and just pay it off immediately. Now, I personally don't advocate for any of these cards. If you're going to be using one of these cards, I recommend doing so as a last resort. Make sure to read the fine print carefully, know the annual fee, watch for setup or monthly maintenance fees, and also avoid any fees that you may get by paying this off early. Once again, this is probably the most predatory interest rate that you will get on a credit card. If you've gone through everything I just listed and you're still struggling to get approved, then it's time to consider a secured card. I have an entire video that covers the best secured credit cards. I highly recommend that you watch that video for a more in-depth review of my top recommendations. I discuss your graduation path, how soon you could look at that and getting your deposit refunded. You also can get these cards with major issuers, and I honestly think this might be a smarter move. A secured card requires a refundable security deposit, usually between at least $200 and $500. That deposit becomes your credit limit, and it's not just used to pay your bills. It just serves as collateral in case you default on the card. From there, it works exactly like a normal credit card. You make purchases, you pay them off each month, and the bank reports your payment history to all three major credit bureaus. Over time, this builds positive credit history, and if you use it responsibly, many banks will graduate you to an unsecured card and refund your deposit. Some of the best secured cards out right now are the Discover It secured card. It has no annual fee. It earns 2% cash back at restaurants, gas stations, and Discover will often upgrade you within 7 to 8 months. Navy Federal Credit Union also has the Cash Reward Secured Card. It's perfect if you qualify for Navy Federal membership. They're known for quick graduation and generous credit limits. The Bank of America Secured Card is another great option that can convert to an unsecured card once your score improves. There's also the Capital One Secured MasterCard. Now, that one will let you start with as little as $49 for your deposit, and you can still get a $200 limit. And again, I recommend you watch the video to see the full list. Secured cards are like credit training wheels, but they actually do work. I've seen people jump from a 520 score to over 650 within just a year just by using a secured card correctly. Now that we've covered the tiers, here's how you use these cards to rebuild effectively. First, pick one or two cards. Don't apply for too many at one time. Each hard inquiry drops your score a few points, and multiple applications in a short period can signal credit-seeking behavior. Second, keep utilization low. Never use more than 30% of your available credit, and ideally you want to stay under 10%. So if you have a $300 limit, try to only spend $30 per month if you can. Third, pay early and pay in full. Don't wait for the due date. Pay it before the statement cycle date closes. I also have an entire video of when to pay your credit card bill. That way you can maximize your score. I'm going to link that here. I highly recommend you watch that. When you do this, these on-time payments get reported to the bureaus and they can help your score rise faster. And fourth, monitor your credit score every month. You can use free tools like Credit Karma, Experian, or even NerdWallet to see your scores and how they change. However, I do have a video where I talk about deleting Credit Karma and only using these 3 other methods to see your FICO 8 credit score completely free. If you want to watch that video, I'm going to link it right here. After 6 to 12 months of responsible use, you should start seeing progress. Your scores may climb into the 650s or higher, and that's when you can start applying for better cards like the Chase Freedom Unlimited, the Amex Blue Cash Everyday, or the Capital One Saver One card. When that happens, don't close your old accounts right away. Keep them open, especially your oldest one, because credit history length is one of the 5 key factors of your score. And here's my bonus tip for you. If you really want to maximize your approval odds, check the pre-qualification first. Every bank that we've talked about, Capital One, Discover, Mission Lane, Merrick, even the store cards, they have pre-approval forms on their websites. Use those before applying. If they show you an offer, it's often a soft pull that doesn't hurt your score. That way you can avoid unnecessary rejections and only apply when you're likely to be approved. Rebuilding credit takes patience, but it's not impossible. You just need the right cards, the right habits, and the right mindset. So if you're sitting there thinking your credit is too far gone, it's not. I've seen people bounce back from bankruptcies, charge off, repossessions. I personally have done it myself within 12 to 18 months, and then they're back into the 700 range. All it takes is one good decision today. Thank you guys so much for watching this video. If you found this information helpful, please hit that subscribe button so you don't miss a video like this in the future. I like to drop content like this 4 times a week. So if you have any other cards that you would like me to review, or maybe you want another video on maybe good cards for fair credit or maybe good credit, then I can do a list of those cards for you as well. That way you have some alternative options to even these. Once again, thank you so much for watching this video, and you guys have a wonderful day.